I'm Matt Bishar with REIT.com here in Chicago for REITWeek 2013. Joining me for this CEO Spotlight is Mike Schall, President and CEO of Essex Property Trust. Mike, thanks for joining us.
It's great to be here.
Essex focuses on multifamily properties, primarily on the West Coast. Can you talk a little bit about how you're finding the fundamentals in your core markets?
Apartment fundamentals on the West Coast continue to be strong. We just received our April-May 2013 results, which indicate that same property revenue is up 6.3%, which accelerated from Q1 and is above the midpoint of the guidance range for 2013. As we expected, Northern California and Seattle are leading the way, and Southern California continues its recovery that is longer term in nature, but certainly go in the right direction. So we're very pleased with the results so far this year.
And with fundamentals, performing so well, has that created a tough acquisition market, and are you still finding deals at reasonable prices?
That's a good question. In 2012, we acquired about $800 million in apartments. Our 2013 guidance assumed that we were going to acquire about half of that, or $400 million, and we're on pace to complete that so far this year, although it is more difficult. Owners of property are pretty pleased with the current conditions. They see the economy getting better. Rent growth is good amid very low interest rates, which is providing good cash flow, so they're reluctant to sell. Buyers, on the other hand, have seen a lot of rent growth already occur and are concerned about overpaying. So I think we're in the part of the market that it's more difficult to make transactions. There's fewer motivated sellers in the marketplace, and like before, we're going to pick our spots and try to find good quality acquisitions.
And now shifting gears, what about your development pipeline? How many projects do you have in the works? And is there any concern on the horizon about the supply-demand dynamic shifting?
The good news is that we don't produce a lot of apartments on the West Coast. Generally, the supply of new housing in total, both for sale and for rent, is less than 1% of stock over longer periods of time. Still, our strategy on the development side is to be an early cycle developer. To that end, we have 9 communities under construction right now, about 2,500 units for an aggregate value of, or aggregate estimated cost of about $1 billion. So we're an active developer. We expect to slow down our development activity as we get further along in the economic cycle, but we're very well positioned right now.
Mike, thank you so much for joining us.
Thank you. Great to be here.
For more on this and other REIT news and analysis, be sure to visit REIT.com.